All right, HPCL has got two resounding pats on the back today from our analysts, both two recommendations through the course of just this afternoon show. Let's get in some more market expert opinion. We've got Anand Tandon and P.Phani Sekhar joining in along with Sudarshan Sukhani to talk us through this last half hour of trade or so. Anand, good afternoon. What are you making of where these markets are headed from here on, and whether the correction that we've been experiencing over the last month or so, or the last 30 days, is well and done with, or there are still downside moves likely?
Well, I would echo what Sudarshan just said, that right now the trend for the last couple of days is somewhat positive, and I think the best thing to do is to play with the trend if you are a near-term trader. If you want to be an investor, it's a lot more difficult to find value stocks out there. So, you'll have to really assume that there will be no shocks along the way. There is no fear in the market right now. Most companies, irrespective of quality of management or earnings, are actually trading up on the basis of money flow, I guess, because the earnings are not supportive right now. So for the moment, wherever there is visibility of earnings, you should just play along with the trade, and keep your fingers crossed. Don't get stuck in too many illiquid counters at this stage.
P.Phani, what's your view on banks? We've got some divergence playing out today between private sector banks and public sector banks.
We'll continue to be positive on that space, especially on the private sector bank space, and you would have noticed that apart from, say, an SBI and a few other public sector banks which in the last 15 days tinkered symbolically with their base rates, you haven't seen much action out there. I think on the profitability front, private banks are placed much better than public sector banks, and to that extent, if push comes to shove, just like ICICI Bank showed, they can reduce their base rates by around 25 basis points or so. More importantly, on the asset quality front also, they are better placed than public sector banks. So I guess there is a good chance that over the next 3 to 6 months, there might be another round of 10 to 15 basis points cut in base rates by many of these leading private sector banks, which can actually poise the competitive landscape very interestingly in their favor.
Alright, by the way, just take a look at one intraday chart, Bhushan Steel. That intraday chart would come up and there's a massive surge. It's a vertical rise that you have seen. 16% in a matter of last 2 or 3 minutes is what we've seen on Bhushan Steel. So big surge on that stock. Before we go to Varinder, Sudarshan, a word on Reliance that really came out of nowhere today.
Yes, it was trading at a support level. Of course, that did not mean it will go up. It has bounced, but one day's rally, much as it's one of my favorites, because Reliance is a giant like Hindi Unilever. Whenever it wakes up, there will be big gains, but it's not waking up, and one day is not enough. So I would not be able to recommend a buy here. You don't short sell, but it's not a buy. It's not enough.
Alright, let's get Varinder in now with some buzzing stocks this hour. Varinder, what's on your list?
A lot of buzzing stocks, especially in mid-cap and small-cap space. Some of the late gainers include companies like Westcon Engineering and a lot of pharma companies. Look at Ajanta Pharma, Venus Remedies, FDC, Natco Pharma. All of them are gaining anywhere between 5 to 10% in the last few minutes. NDTV, Sepco, Indocount Industries, Arcia International, Tinplate, Godrej Industries, a few other stocks which are gaining in the last half an hour. Some of the late losers, Anush mentioned, was Sun TV. Look at GM Breweries, that stock was down 10% last time I checked on subdued numbers. And some of the fertilizer stocks like NFL, FACT are also reacting downwards today, down nearly 4-5%. Some of the mid-cap gainers are names like Geometric, India Cements, IRB Infra, Crompton Greaves, MTech Auto. Look at most of the food companies, all of them are buzzing today, whether it's LT Foods, KRBL, NHC Food up 20% the small cap, and Lakshmi Energy and Foods. All of the sugar stocks are very active today. So Uttam Sugar, Bajaj Hindustan, Balrampur, Shri Renuka up anywhere between 5 to 12%. Some of the holding companies like Uniforce Enterprise, Rane Holding are up 20%, and some of the smaller textile companies like Eastern Silk, HP Cotton Textile, Aero Textile have gained anywhere between 10 to 20%. There are a lot of companies which are buzzing up in the small cap category. Even more up 20%. SD Aluminium, the stock which fell from 719 to 121, is retracing back up 20% today. Capital Trust up 20%. Some of these auto ancillary companies like ABC Bearing and Gujarat Automotive Gear up nearly 15-20%. Himadri Chemicals up 20%. Visa Steel, Prakash Industries, up 10 to 20%. TGB Banquets is up 20%. This stock has gained 200% in 2015 as of now. Jindal Photo, One Life, Indocon Industries, India Bulls Power up around 15%. ABM Knowledge up 15%, and Archie's and Forbes and Company also gaining around 10% today.
All right, Varinder, thanks a lot for that. Let's get back to our experts then. Anand, clearly the banks have a bit of a problem. The bank Nifty has clearly given up the leadership role. In that case, what do you think could be the sector that could take market higher, or do you think it would still have to be banks and maybe there will be a bit of recovery?
Well, banks, as you said, they've already been something which most people are invested in, perhaps heavily so. So for it to now continue to run, unless the earnings turn supportive, is a bit difficult. Within that financial services space, I think, probably the one space where there is some value still to be extracted is the housing finance. Because if you do expect the interest rates to kind of soften a bit from here, which is quite likely, the wholesale borrowers are the ones that will benefit the most first. And there the valuations, at least among the leading companies, is somewhat cheap. So, I would think that that's the best place to be. Some of the NBFCs too will probably rally if the MHCV sector actually starts to perform for over an extended period of time. But that's a smaller sector. Frankly, when I look at the earnings profile and the valuations of companies, I find that the only sector which has not done so well is the export-oriented companies. Of course, that doesn't mean that pharma has not done well. Pharma has done exceedingly well. IT is the biggest space which has not done as much as the rest of the market, and I think there are some interesting opportunities there. The near-term earnings will be a problem, but I think you will find that probably over the longer term it's still okay. The more traditional sectors like textiles and so on probably will offer some value, again selectively. Basically, the case that I'm making is that the domestic market, while it is poised or is looking forward for a recovery, has run up so far ahead that at least I find it difficult to find too many stocks which are worth buying at this stage.
Anand, do you find any value in real estate anywhere? That's been a sector that's been in focus today. Any stocks that stand out or appeal to you, or is it a sector that you don't usually invest in?
I don't touch that sector. I find it difficult to understand the balance sheets. The disclosure levels are not good enough. And more importantly, I think that again, if you have to buy real estate, the easier way to do it is to buy housing finance companies, which is far easier transaction to do and far cleaner way of investing.
Okay, Phani, a word on Coal India. Do you think it's getting its mojo back, or is it just a move that's again going to flatter to deceive, that like we've seen in the past as well?
Well, the production numbers are certainly encouraging, and it seems that the company is poised to do well next year also. This is something that we of course hear every year. But as long as they maintain a 5% volume growth in production, I think things should be reasonably okay for them. So I guess it is one of those stocks that is not a growth stock, but if you are looking at around a 12% capital appreciation with another 3 to 4% dividend yield thrown in, it's a good, nice, stable stock in your portfolio. Apart from that, I don't see Coal India doing any wonders in the near to medium term.
Let's stick with the energy theme, Phani. We've had Sudarshan talk about Reliance, energy-related stocks. Reliance, just in the last 15 minutes or so, we've seen Cain India's, recover some of the losses. So Cain India is doing very well. GAIL is doing very well. NTPC is doing very well. I'm talking about the last 15 minutes of trade. I'm not talking about generally in life. Are any of these stocks appealing to you right now?
Well, I do not know what has changed over the last 15 minutes or maybe last 1 week in the energy space to suddenly warrant all these stocks doing well. And it's very interesting that on one hand you have an oil marketing company doing well, which is HPCL, and on the other hand Cain also doing well. So either one of the things has to be true, which is oil is either going up or it's going down. So I think the market right now is bereft of good ideas, just like Anand was pointing out, and to that extent, and when that happens, then some interesting contra moves like this do take place in the market.
Okay, Sudarshan, a word on Sun TV, because that's been very volatile today.
No, but it broke down earlier itself when it fell 10%, and it also broke significant support levels in that process. I don't think this is a a buy on dips opportunity. There is no dip. It's like catching falling knives, which is not a good idea. Just avoid Sun TV completely.
Okay, two of your erstwhile favorite stocks, Sudarshan, Oro Pharma and TVS Motor, how would you approach them now?
No, Oro Pharma is not erstwhile. It's just pharma companies go up, then they consolidate, and then they, at least so far, then they resume their up move, and Oro Pharma qualifies in that group. I would be a buyer in Oro Pharma without any confusion. TVS Motors is, you are right, that stock has now completed its bull run, it's distributed, it's gone through a very large consolidation, broke down. That told us that at least for many months the uptrend is over. Don't touch TVS Motors now.
Okay, Anand, a word on Reliance, and do you think that could be the next cheerleader for the market, or it's showing signs of that for the last couple of days?
Well, it has flattened to deceive earlier. It is a high weight, and therefore if it does move, obviously it can move the market whichever direction it goes in. But I don't see much that's happening in the company in the near term other than Reliance Jio whenever it comes that can significantly change the earnings outlook for now.
Funny, apart from pharma, the only sector that's made money is telecom in the last, say, 1 month or so. But do you find valuations attractive still for Bharti and Idea, or would you now wait for a correction? And what's your broader call on the sector?
Well, I've been avoiding this sector for many years now, Anuj, and the recent auctions really do not provide me any reason to change my view. I think the enthusiasm in the telecom sector is more of a relief that something more damaging did not happen in auctions compared to where 2010 auctions ended. So I would look at it as some kind of a relief rally. Other than that, the return ratios are not improving anytime soon. At least when I'm seeing analyst reports, forecastable horizons of the next 2 to 3 years, I'm not seeing return on equity is crossing double digits. So I don't know what is the basis for paying such hefty multiples for many of these stocks.
What about auto? Funny, is there anything there that looks attractive to you?
That entire space is much better play on interest rates going down, although it has taken some kind of a sentimental hit, if you can use that word, since RBI really put a dampener. Having said that, I think two-wheelers to me certainly looks pretty good. Commercial vehicles is a high beta call that one can look at, but I think two-wheelers is a relatively safer bet because both Bajaj and Hero, and especially Hero, is looking pretty attractive after the correction that took place, which was completely due to non-business reasons. Disclosure here that
Bajaj has been having a fairly dismal few months, Phani. Export numbers are not looking good at all. Even in domestic market, the market share is under pressure, intense pressure that is. So I'm just curious as to why you still think Bajaj is an interesting buy.
I'm preferring Hero over Bajaj, Manika, but in the sector, Bajaj also can basically qualify to be an interesting buy because if you are assuming a 10% volume growth in the domestic market and expect Bajaj not to lose any more market share, and thankfully they have actually gained market share in the sub 125cc segment, although very marginally. If that were to happen, I think from a valuation perspective, at least the bottom seems to be in place in Bajaj.
Anand, do you like auto at all? Would you prefer to play auto, let's say, from a passenger car point of view or a two-wheeler point of view, or would you rather at this point in time bet on a commercial vehicle recovery, signs of which are nascent right now, and try and play, let's say, a Tata Motors or an Ashok Leyland from that?
Well, the entire sector is extremely competitive right now. The two-wheeler space has so much competition and so much happening with the revival of the scooter market as well, that it's difficult to take a call on which one of these companies is going to do well. I would kind of think that if Bajaj comes back into the scooter market, of which I've heard some rumors, you may find that most of the negatives are in the price, the positives, there may be some positives out there. That could be the only justification. Other than that, if you look at it strategically, Bajaj seems to have missed out all the major strategic moves that have happened in the industry, whether it is looking at the bikes from where Enfield is positioned to getting back into scooters, which has been a surprise for the industry, and so on. The four-wheeler sector, again, extremely competitive. There is no question that MHCV is the one section that will, I think, begin to do well from now as mining revives and as the north-south corridor and so on pick up. But none of the companies are really cheap there. So, again, the question really will be that if you think that there is a revival nascent, maybe you are better off looking at a Shriram Transport or Rachola Mandalam Finance or something of that sort rather than directly paying the auto.
I can see NBFCs are a clear part of your buy strategy right now, whether it's housing finance or otherwise.
Well, that's right. I mean, so long as they are able to maintain the margin and if the demand picks up, it is easier to play most of the sectors through that. The earnings, the valuations of the companies like the auto sector are all trading at upwards of 20-25 times, and that doesn't leave you much hope for comfort.
Okay, so Anand, let me ask you one more question, and let me see if you have similar answer for that. The other sector that's doing well is infrastructure, and even infra finance companies as well. So, what's your take on this entire space? Because we've seen a lot of order wins as well, particularly in the road sector. We've started to see some development, and for some construction companies, we've started to see some order inflows.
Well, again, the construction companies themselves have actually gone up almost 5 to 10 times. If you see any of the smaller ones, they've kind of gone up very hugely. And the fact remains that while there will be better order flow, one was expecting to see lower competitive intensity. However, anecdotal evidence seems to suggest that, the big guys are still very aggressive in terms of their bidding. So it is not as if the margins will be any better. I mean, without higher margins, none of the construction companies are in a position to show more than 3 or 4% net margin. So while the top line may continue to grow, and consequently you may find that there is some uptake on the bottom line as well. So on an earnings growth basis, they'll probably look decent, but on an ROE basis, I think you'll be hard put to find a company which even at 2017 inflated projections will show you a slightly double-digit ROE. So, if you are going to buy a stock which is going to be at 4 times book value and, have 10% ROE, I think it's a little difficult to justify that. But that said, non-asset owning construction companies are probably the one place you may want to be. For the rest of it, I think, again, if you look at road owners, nothing much is going to change unless you assume very dramatic increases in traffic, which I don't think one is justified in assuming right now. The ports and airports never make money. I mean, you take a Singapore airport, I think that's probably one of the best managed airports in the world. It barely has a double-digit ROE forever. So I don't see how any of the Indian companies are going to make money on that. That pretty much leaves you with the power sector. And the power sector definitely is a place worth looking at. I think you will find that again, the financing companies are the ones that are going to recover the first, and subsequently the utilities. Utilities obviously have been thrashed out completely out of shape, so that may be a sector which may give you a contrarian buy. But I think there is some time for that now. You have to be willing to sit on it for 12 to 18 months to make some money on that.
Well, pretty much everything is best run in Singapore. That's something that you can say. But Sudarshan, a word on Suzlon. I remember 3 or 4 days back you were saying that keep this stock on your radar from a long-term investment point of view.
Yes, I repeat that. If you are a long-term investor, Suzlon as part of your speculative portfolio is worth it and deserves attention, and you can actually buy it. There is no need to time it. 10% up or down makes no sense. It's been in a very long trading range. It's just breaking out, and that process takes time, but it's worth buying and holding on to. I think it could double or even triple in the next 5 years.
Funny, you have a call on Suzlon because it used to be an index stock. Of course, after that we saw all the problems becoming a penny stock. But a lot of investors are now again tracking it. We've seen a couple of brokerage reports as well on Suzlon.
No, I don't track this, Anuj.
Fair enough. Anything that you like in the broader market, Phani, that looks interesting to you?
Well, broadly one is liking the NBFC space, Anuj, like housing finance or transport finance. Even infrastructure finance to some extent looks good because the infrastructure companies survive to service the infrastructure finance companies. So if one is expecting some kind of revival there, I think infra finance companies might be good bets out there. Apart from that, many of the other sectors, especially the typical mid-cap oriented sectors, are quite overpriced at this point in time.
In NBFCs, any stock that you like that Anand hasn't already named?
Well, he has named almost all of it.
It is turning out to be the NBFC show, isn't it?
And many of those stocks we own in our portfolios as well.
All right. Funny, a view on what this earnings season will bring us. I know the expectation is that it's not going to be a good one. Specifically, which sectors do you think we will see, big disappointments?
Well, it was never expected to be a good one. Biggest disappointments might be seen in the FMCG space, and I think we already saw a precursor to that in the third quarter results. Rural consumption is not going anywhere. There is a significant amount of distress out there. So rural consumption, which was actually the driver for both margins as well as volume growth for FMCG companies, mid-cap and large cap, might be up for revision this time round. Apart from that, I think the pain in public sector banks might continue. IT and pharma, along with private banks, are more or less expected to be, as they were in, say, third quarter or for the last 9 months or so, which will be around 20% growth rate. So all in all, the fourth quarter earnings will be more or less similar to the 9 months earnings which you saw, which is closer to around 7 to 8% growth. But what will be very important is the kind of commentary that the capital intensive sectors come out with, because one is now, the market is now hinging on things improving from second half of FY16, and for that to happen, the companies have to turn optimistic right from now.
All right, fair enough. I'm going to put that question to Anand as well, but that's after markets close. We're about a minute away from that. And we've had a steady climb this afternoon. It's not a sharp climb, but it's a steady one. So we are going to close above that 8,700 level at about 87.15 or thereabouts. That's a 55-point gain on the Nifty and 180-point gain on the Sensex, which will close at close to 28,700 levels. The mid-cap space has held on to its gains. It was, in fact, doing better than the frontline indices, and it is now up almost 100 points on the mid-cap index. Stocks that have done very poorly today, despite this higher rise, is what went on with private sector banks. So if you take a look at those stocks, they've all done very poorly in trade today, starting with ICICI Bank, Yes Bank, Kotak Bank, IndusInd Bank, Axis Bank, HDFC itself was also under pressure. So a bunch of financial private sector stocks, bank stocks, are doing very poorly in trade today. On the gaining side, you had some solid gains come in from Reliance, from a couple of tech majors like Infosys and TCS, and in the FMCG space, ITC has had a good day today. So those are some of the big supports to the Nifty. Besides that, Coal India was a top gainer in trade today. Bharti Airtel did well, Dr. Reddy's did well, and HDFC Bank was probably the only private sector bank that ended in the green. It had some help from public sector banks like SBI and PNB, which also did well in trade today. Anuj?
Well, mid-caps, as you pointed out, Menika, outperformed for a better part of the day. The advance decline ratio was 2:1. The stock of the day was clearly Bhushan Steel in late trade, the kind of move that the stock made, 16% higher on that. Apart from that, logistics made a bit of a comeback in last hour of trade. Snowman Logistics in particular, that stock was up 5%, and all of that came in the last 10 minutes of trade. Through the day, the stocks that were up included mid-cap IT, Firstsource and Geometric, both were up 7%. India Cement, that was up 5%, though it came off the morning high. In the morning, it was up some 10%. Crompton Greaves was up about 4%. REC, not strictly a mid-cap, that stock was up 4% as well. On the losing side, you had Suzlon, that was down about 3%. And Sun TV, again, not strictly a mid-cap, but that stock was also down close to 5%. A word on the volumes, 20,000 crores in cash market and about 1.8 lakh crores in F&O. Slightly lower F&O volumes today, but cash market volumes
did quite decently well. Anand, let me put that earnings season question to you. Where are you expecting the big disappointments to come through, and any positive surprises that you're expecting at all in any of the sectors?
Well, surprise is always difficult to predict. That's why it's a surprise. But broadly, the earnings can't be. The forecast from most of the brokerages is that the earnings will be flat year on year, and if you take in energy, then it will be negative. So I can't imagine that there will be any major surprises that one can anticipate. Most of the companies have either already guided upfront or everything from local consumers to IT companies have pretty much warned that this quarter is not as great as one would think it to be. Possibly energy, especially oil, may be something which may be a bit of a surprise, but beyond that I can't think of any others.
Okay, Sudarshan, a word on ITC that started to do well again. I mean, it was the biggest underperforming stock, but this month it's up 6%.
Yes, but IDC is probably going to be an underperformer for some time now. That sharp decline was a mini bear market. It's not easy to recover from that, and it's outperforming for so many reasons, including, I assume, index management. But I would not buy ITC at all. My favorite continues to be Hind Unilever. There was a dip, and again, forget about the dip. Even at current levels today, for traders, there is an opportunity to buy.
All right, gentlemen, we're going to close this conversation there. Thank you very much for joining us this afternoon. That was how markets did, but we've got a big deal, that's played out in the energy space over the last 24 hours, Amit.
Indeed, Menika. A colossal merger is on the cards in the energy space as Royal Dutch Shell is in talks